Labenthal Global Advisors President Dominick Tavella, also joining the conversation all morning long this morning, is Forbes Media Chairman and former Republican presidential candidate Steve Forbes, and Strategic Wealth Partners President and CEO Mark Tepper. Great to see you guys this morning. Thank you so much for being here. Dominick, thanks very much for weighing in here. It looks like we are beginning a new day just the way we ended yesterday. More selling this morning. What do you think is behind this, and do you see an end in sight?
Well, let's start with not surprising what the futures look like this morning, Maria. A lot of people got home last night, looked at the headlines on the news channels, and they got up this morning going, I got to get out. I can't deal with the pain. And this might be that swoosh that everybody's waiting for, that final event, where particularly the retail investor says, I've had enough. I can't take any more pain. And they get out. They get out. But to your point, it was Target, it was Walmart, and it really proves the point that the consumer not being able to deal with the pain at the pump and higher prices is changing their spending behavior. So ironically, they're still spending money, but they're being a lot more careful, and they're switching the services and products to try to cut costs and save wherever they can.
I mean, we've been talking about the idea of demand destruction. I said the other day, look, if 2021 was a year of supply chain issues, will 2022 be the year of demand destruction, where consumers go to the stores and say, you know what? It's actually all too expensive. I'm walking away. I'm not buying anything. That is why Morgan Stanley, in an analyst note recently, said that the forecast for a recession is 27% in the next year. This is a major jump from March, when that number was 5% in terms of a chance of recession. Dominick, do you believe that we are going to see a recession this year?
I'm still in a no recession camp, Maria, but stagflation, where inflation stays exceedingly high and the economy grows at a very, very slow rate, that I think is in the cards. I think we're looking at the third and fourth quarter where maybe inflation moderates, maybe in that 5-6% range, but the economy is only growing at 1 to 2%, which is exactly what the Fed wants. They are purposely, intentionally slowing the economy down so that consumers stop spending or change their spending habits, and thus puts downward pressure on inflation.
Well, I mean, look at gasoline prices, a new record high nationally. Today's average is $4.58 a gallon, according to AAA. Dominick, this is a very troubling sign, and J.P. Morgan is now predicting that gasoline is going to surpass $6 a gallon by August. We haven't even gotten to the peak driving season, which is the summertime, Dominick. Is this going to persist in terms of gas prices, inflation, cutting into the consumer's ability and willingness to spend?
At least for the next couple of months, and 2 to 3 months wouldn't even surprise me at all. And even though, when we go to the pump and it costs us an extra $25, $30 to fill our gas tank, for us, maybe it's not the end of the world, but for 50% of the people in this country, that's the difference between being able to put food on the table or pay their mortgage. Yeah. So when they go and shop and they go and spend, they're looking for an alternative where they can cut costs. And in some cases, they've cut discretionary spending completely. So we definitely will see the economy slowing down as we go out through the year. And maybe this change in spending habits is going to put some downward pressure on the price of gasoline if people aren't traveling as much. Certainly the price of food and other products if people aren't buying as much.
Steve Forbes, what I'm wondering now is when the layoffs start coming, because you've seen recessions before, Steve. And if we are actually in a recession right now, which we could be, we already saw 1 quarter of contraction. We're going to get revisions to the first quarter, but that's already evidence of the first part of this. Do you think companies are going to start announcing job cuts?
I think you'll start to see some do it, but given the shortages of labor, I think companies are going to be loath to lay people off. They want to see more of what actually is going to happen to the economy before taking action like that. So, yes, some companies will be forced to do it, especially as rates rise and so-called zombie companies find out that they're being squeezed and small companies can't get bank loans. But the fact of the matter is most companies are going to try to hang on. So I don't think, Maria, you're going to see until the end of the third or fourth quarter that you're going to see companies throw up their hands in despair and say, we got to do what we never thought we were going to do a few months ago.
Yeah, I mean, Dominic, isn't that the issue, right? I mean, we've got this tight labor market. It may very well be busted up if companies start announcing layoffs in the face of recession.
Well, first, I think Steve is spot on. The speculative tech sector, we're already starting to see layoffs, and I think those people are going to find jobs pretty quickly. Again, we have a huge labor shortage, especially qualified labor, but employers are not going to lay people off, at least until the very end, until they have to. The hope here, of course, is we get into the third and fourth quarter and things stabilize and maybe don't look as ugly as they do today. And let's not forget that, wage increases have been pretty good. The unemployment numbers have been pretty good. And we're trying to predict the future here. But there's a good possibility that we're in a better spot in the third and fourth quarter than we are today.
Do I hear you looking for opportunities here? Are you going to be buying this sell-off, or you want to stay on the sell side here?
We have about 10% on the average cash. That's lower, Maria, than we were a month ago. So maybe in hindsight, I should have been a little bit more patient. But if you can buy good quality companies, not speculative, good quality companies with good earnings, good pricing power, you have to nibble. You have to nibble.
Okay. Dominic, good to see you. Thanks very much. Dominick Tavella joining us this morning.